Welcome. Today we're going to be talking about corporation tax. What is it all about? Why does it matter? What are the fundamentals? Corporation tax. What is it? Well, corporation tax is the tax that companies pay. So this is any limited company that you have formed to structure your properties. This will fall within the corporation tax regime. Now, you might think, do I just get a corporation tax bill at the end of the year? Well, yes, but they won't send it to you. You have to assess what the corporation tax is that you have to pay and then make that payment. The first thing you'll need to do is register with HM Revenue and Customs. Now, this tends to be done automatically by Companies House when you register your company with them. However, initially, HM Revenue and Customs may treat your company as dormant, so not expect anything from you. So you'll then need to tell them that you are actively trading and that there is something that you will need to report on. Throughout the accounting year, you will then need to keep your company records and check out the separate video on what records you will need to be keeping and what you'll need to be showing to HM Revenue and Customs if they ask. At the end of the company year, accounts year or the tax year for the company, you will need to then collate what is known as your company accounts. Again, check out the video on company accounts and what they include and what they involve, which is also on the channel. Now, from these company accounts, you'll do your corporation tax calculations. Now, these calculations take into account the income, the expenses, any tax adjustments. That then goes on to your corporation tax return, which is also known as a CT 600. Now, this gets completed and then needs to be submitted to HM Revenue and Customs within 12 months of your company accounts year end. The only difference is the tax that may need to be paid needs to be paid by 9 months and a day after the company accounts year end. A bit of an oddity. We're probably expecting it to change at some point, but at the moment we've got the 9 months and a day rule for payment and 12 months for your corporation tax return. Typically, we would get things filed within the 9 months personally to just make sure everything is filed on a timely basis. However, if it goes in after the 9 months and a day, it just means that the taxman will catch up with you later to check that you've made the relevant payment that you needed to make. Corporation tax is paid on the profits of the business. So this is the income less the expenses to give you the profits. And then there's a few adjustments, which we'll go into in a moment. Normally, you'd get a chartered or a qualified accountant to complete the corporation tax return. This is normally because the company accounts are completed by them as well to make sure that they're in the statutory format. Now, this is a way of making sure that you are complying with all the rules, as these rules change on a regular basis each tax year as different tax finance acts and bills are put into place. The current tax rates are sitting at 19% and they'll be going up to 19 and 25% in the not too distant future. To help reduce your corporation tax, you're allowed to claim all the expenses in your accounts as allowable expenses. There are a few, however, that are not allowable. The key ones that I'd expect you may see are things like entertaining, which isn't allowable for taxes but is allowable to be included as an expense within the company accounts. The other allowances and reliefs that are worth mentioning are capital allowances, which are the allowances on the plant and machinery, the furniture, the fixtures and fittings within your business. I will be doing a separate video on capital allowances and how that applies to a property company, as there are a few quirks with this area and we want to make sure you're claiming as much as possible within this area of your tax calculation. If you make a loss in your property company, which I do regularly see in the first year or so with training costs, with refurbishment budgets and different things happening where you've probably got minimal income but you've got a lot of expenses in the initial setting up stage, these losses will get carried forward to future years. Now that's great because when you do start making a profit, you're not going to be paying tax straight away, and it's going to reduce your tax in future years until the point where you fully utilise those losses. Now this needs to be used in the same business, same trade, but as this will all be hopefully related to your property endeavours, that isn't a problem and you'll be able to use it in future years. In talking about losses, there's also a benefit that if you do set up in a group structure, which please do check out the video of why that might be worthwhile for you, you'll be able to potentially use group relief. And group relief is where a loss in one company can be passed to another company in the group of companies. So again, you don't want to be paying tax in one company and making losses in another. What you really want to be doing is netting it all off and then not paying any tax at all. So this is a great tool when you're set up in a group. When the tax rates change with 19 and 25% coming in, there will then be marginal tax rates, which means when we go between the tax thresholds, there'll be a higher rate of tax that applies in that threshold until you reach the higher tax rate. I'll be going into this in a little more detail as this happens. Corporation tax is a simple but complex tax. So we'll be going into a few more complex areas over the next few videos on this topic. Hopefully today you've discovered what corporation tax is, how it fits together, and what it means for your property company. If there are any specific points you would like more detail in, then please do comment in the box below so we can make sure that future videos include those information for you to learn more about how you can make it work for your property company. Please like the video and please do subscribe to the channel to keep up to date on your property, tax and accountancy related topics. If there are any topics you would like to be covered, then please do comment in the boxes below. Let's make tax less taxing.